All right, thank you so much for joining us. It's Tuesday's edition of Business Nigeria. Welcome to the show. It's decision day at the Apex Bank after the two-day Monetary Policy Committee meeting chaired by the Central Bank Governor. I link you up to Abuja now, where the Governor is ready to reel out the outcome of this two-day meeting.
The committee decided as follows. 1. Reduce the monetary policy rate, MPR, by 50 basis points to 27%. 2. Adjust the standing facilities corridor around the MPR to plus 250 to minus 250 basis points. 3. Adjust the cash reserve requirement, CRR, for commercial banks to 45% while retaining that of merchant banks at 16%. Also, to introduce a 75% CRR on non-TSA public sector deposits. And 4, keep the liquidity ratio unchanged at 30%. The committee's decision to lower the monetary policy rate was predicated on the sustained disinflation recorded in the past 5 months, projections of declining inflation for the rest of 2025, and the need to support economic recovery efforts. The MPC also adjusted the standing facilities corridor to improve the efficiency of the interbank market and strengthen monetary policy transmission. The committee further introduced a 75% CRR on non-TSA public sector deposits for enhanced liquidity management. Considerations. The MPC expressed satisfaction with the prevailing macroeconomic stability evidenced by the improvements in several indicators. These include the sustained disinflation, improved output growth, stable exchange rate, and robust external reserves. It particularly noted the increased momentum of disinflation in August 2025 being the highest in the past 5 months. This deceleration, underpinned by monetary policy tightening, exchange rate stability, increased capital inflows, and surplus current account balance, have helped to broadly anchor inflation expectations. Other factors that contributed to the deceleration include the continued moderation in the price of PMS and the notable increase in crude oil production. In the view of the committee, the stability in the macroeconomic environment offered some headroom for monetary policy to support economic growth and recovery. Notwithstanding the consistent deceleration in inflation, the committee observed the persistent buildup of excess liquidity in the banking system, resulting largely from fiscal releases emerging from improved revenues. Being mindful of the need to preserve the prevailing macroeconomic stability, the MPC noted the risks posed by the excess liquidity in the banking system. Members noted that effective functioning of the interbank market remains critical to enhance transmission of monetary policy. This, therefore, informed the decision to adjust the width of the standing facilities corridor to boost interbank market transactions and enhance the stability of the market. The committee acknowledged the continued stability of the foreign exchange market and its critical importance in achieving rapid disinflation, and therefore called on the bank to continue the implementation of policies that would further boost capital inflows and deepen foreign exchange liquidity. On the financial sector, the MPC noted the continued resilience of the banking system, with most of the financial soundness indicators remaining within their respective prudential benchmarks. Members also acknowledged the significant progress in the ongoing bank recapitalization exercise, as 14 banks have fully met the new capital requirement. They therefore urged the bank to continue the implementation of policies and initiatives that would ensure the successful completion of the ongoing recapitalization exercise. The committee further noted the successful termination of forbearance measures and waivers on single obligors, which has helped to promote transparency, risk management, and long-term financial stability in the banking system. The MPC reassured the public that the impact of the removal of forbearance is transitory and does not pose any threat to the soundness and stability of the banking system. Price and other domestic developments. Headline inflation year-on-year moderated further to 20.12% in August 2025 from 21.88% in July, driven by the decline in both food and core inflation. On a month-on-month basis, headline inflation also decreased to 0.74% in August 2025 from 1.99% in the preceding month. Similarly, core inflation year-on-year eased to 20.33% in August 2025 from 21.33% in July, due to the slowdown in the cost of services, housing and utilities, as well as transport and logistics. Food inflation year-on-year also moderated to 21.87% in August 2025 from 22.74% in July, attributed to the decline in the price of staples, especially rice, guinea corn, maize, and millet. On output, the recently released GDP for the second quarter of 2025 showed the sustained resilience of the Nigerian economy, with a real growth rate of 4.23% year-on-year, compared to 3.13% in the first quarter of 2025. The committee particularly noted the significant improvement in the performance of the oil sector, which grew by 20.46% compared to 1.87% in the preceding quarter, a positive development that is expected to further bolster foreign exchange reserves and sustain stability in the foreign exchange market. In this regard, the committee commended the efforts of the federal government and called for continued vigilance to strengthen the momentum of security across the country in order to increase oil output and food production. Gross external reserves remained robust at $43.05 billion as at September 11, 2025, compared with $40.51 billion at the end of July 2025, with an import cover of 8.28 months. Similarly, the second quarter 2025 current account balance recorded a significant surplus of $5.28 billion compared with $2.85 billion in first quarter of 2025. Global developments. Available projections indicate that global output recovery is expected to improve on the back of favorable trade negotiations and monetary policy easing, particularly in the advanced economies. However, persistent geographical tensions and lingering trade uncertainties could disrupt global supply chain and dampen the outlook. Global inflation is projected to sustain its deceleration, albeit at a slower pace due to the impact of trade tariffs and other structural challenges. This trajectory has necessitated a cautious and data-dependent approach to monetary policy easing by central banks, especially in emerging markets and developing economies. Outlook. Staff projections suggest a sustained disinflation over the coming months, driven by the lagged effects of previous rate hikes, continued stability in the foreign exchange market, and decline in the price of PMS. Furthermore, the onset of the harvest season is expected to increase local food supply, moderate food prices, and contribute to the overall decline in inflation. In its commitment to achieving the core mandate of price stability, the committee will remain proactive through a data-driven policy response. The next meeting of the committee is scheduled for Monday, 24th and Tuesday, 25th November 2025. Thank you.
Thank you, Mr. Governor. That was communique number 159, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Adekunle. We'll now take some questions from the press. Please state your name, your medium, and you answer the question. And because you know you're entitled to get that. Thank you.
Good afternoon, Mr. Chairman and other esteemed members of the MPC. My name is Linus Sope from Radio Nigeria. Mr. Governor, sir, very recently the Central Bank of Nigeria unveiled a new framework for its payment system vision 2028. Please, can you speak more to it? What does this mean for the financial system in Nigeria and ultimately for Nigerians? Thank you.
Thank you very much, Linus. Let me first say that the Nigeria Payment System Vision 2028 is the attempt to fashion out a payments framework within a constantly evolving ecosystem. As we know, the ecosystem, if there's anything that we generally see with technology and with payments, is that things are constantly evolving and changing all the time. And we need to ensure that we are in step with those changes. Why is that important to us? Because ultimately, we appreciate how a strong and virile payment system helps to lift people out of poverty. And so, with that responsibility of ensuring that our payment system is fit for purpose and is one that meets the aspirations of the financial system and businessmen, a new strategic framework for the next 3 years is being designed. Ultimately, we believe that the impact of this particular framework will be that it will enhance access for financial inclusion, particularly people in the rural areas who perhaps may not have had access in the past, and we know that this has to be a continuing focus of the central bank. Also, we believe that it will enhance security so that the problems you may have had in the past with payments will be significantly reduced. And of course, it will enhance efficiency so that the downtimes and things like that will be significantly reduced. Net-net, we believe that the bold, futuristic outlook is one that is going to be very positive for the Nigerian economy. And let me also conclude by saying something that I believe is very important. In fashioning out the future on the payments and on the vision, we feel that it is very important that the leadership of the central bank be very, very, very much on tone and able to set the path and talk and walk the talk. And that is why more recently, a couple of months ago, we had a retreat, and the theme of the retreat was basically on digitization and AI. And this is all towards the path of ensuring that we are able to lead from the top and ensure that matters such as this are given the utmost attention for the betterment of all Nigerians. Thank you.
Good afternoon, Mr. Governor, sir, other management staff. My name is Sarah Chimobu, channel CBN. My question is, the issue of regulatory forbearance for certain Nigerian banks seems to be a current topic in the media. The CBN began a phased withdrawal of these measures in June 2025. What is the CBN's position on this matter and the intentions of some of these institutions to distribute dividends to shareholders? Thank you.
Thank you very much, Sarah. And here again, let me start off by saying that the issue of forbearance is an issue that has been an ongoing conversation since we took the saddle of responsibility at the central bank. It has been an ongoing conversation. And in particular, last year, we had a number of different dialogues with the banks. And we believe that it is something that the banks themselves should have done earlier. But that notwithstanding, we are pleased at the responses that we have seen so far. And we are steadfast on the date that we have given with respect to the exit of forbearance. In particular, as many of you may know, there are three restrictions. One is the issue of offshore investments, the other is dividends, and of course payment of bonuses. We are pleased, as I said, that some banks have already commenced well in advance of exiting the forbearance, and we believe that going forward we will see the banks complying fully. Of course, those who comply are very welcome to go back to the regime that was in place before we came out with this particular circular, and those who are not, well, they stay until they are. Thank you.
Good afternoon, Mr. Governor. My name is Mark Tibo from the United. Recently, you were part of the presidential delegation to Brazil, where you met with your Brazilian counterpart, the president of the Bank of Brazil. And we noticed that you had some meetings with him. Can you please give us an idea or take away from that meeting which we think will be important to us? Thank you.
Thank you very much. Yes, I can understand your saying my counterpart, central bank governor, but beyond that, his name was Galipolo and my own name is Cardoso. Yes, it was a very interesting and engaging encounter. Very interesting, in the sense that, as you know, Mr. President went on a state visit to Brazil, and I was very fortunate to be included in that entourage, and I was very honored to meet with the President of Brazil. And I was quite impressed, frankly, with the enthusiasm that greeted the delegation that went from Nigeria to Brazil. As you all know, there are very strong historical ties between Brazil and Nigeria, very strong historical ties. And getting there and seeing the response that to the delegation was really quite impressive. Now, for me, I had the privilege of meeting with the governor of the Bank of Brazil, and I went with a number of people from the central bank, and we had extensive dialogue. Some of the things that we spoke about extended to the whole issue of how we can support the potential trade, the potential trade opportunities between Brazil and Nigeria. Because without a very strong virile banking system that will support that enthusiasm, then we would have done a disservice to our country. How we can enhance, deepen collaboration between Brazil and Nigeria. Beyond that, beyond the immediate of enhancing the trade opportunities, I'm sure many of you may know that Brazil over the years had also gone through rather challenging period in its financial development. At one point in time, the country itself was heavily dogged by inflation, price instability, etc., etc. So of course, today is a completely different story. I mean, Brazil is one of the leading countries in Latin America, and a lot of people and stakeholders go to learn from their success stories. So we also use that visit as an opportunity to engage and to see how we can share experiences, both in terms of monetary policy and inflation targeting, and in terms of financial policy and financial regulation, and see how we can have good collaboration and exchanges between the two countries to enrich the things that both sides are doing.
Good afternoon, Mr. Governor. Good afternoon. My name is Musa Botoli. My question is, at the fireside chart of the European Business Chamber of Nigeria, you pledged to protect the financial stability of this country with the utmost zeal. The question is, why should Nigerians trust the central bank under your leadership when many still face economic hardship? Thank you.
Thank you very much, Musa. Why should Nigerians trust the central bank with me at the helm of leadership? Now, let me firstly go back, and because sometimes it's good to remind ourselves about where we are coming from. And if you recall, we have basically come from 2 years ago, where perhaps things were in a very, very, very bad situation. Very, very bad situation, especially in terms of the macros. We know foreign exchange was difficult. We know that many of the investors had taken flight. And we know that people had lost confidence in the currency. We have moved forward in stabilizing the economy. We have moved forward in stabilizing the economy. The reforms that we have undertaken have been reforms that we have been open and transparent about, and that have brought results, and people can see the results because the numbers speak for themselves. We have had a situation where more and more recognition is being given, not by us, but by the international community. Bear in mind that many of the agencies who look at different countries for a living, Moody's, Fitch, etc., the rating agencies, they have over the past 2 years been very, very, very systematic in improving the rating of Nigeria and actually hailing the reforms that have been taken. So yes, we hear you in terms of the question you asked, while certain things still prevail. But I think the response to that is that this is a journey. It isn't it's not a short dash. And in that journey, we have come a very long way in creating that stability, which will now serve as the platform for growth. And that is something that, as I said, the numbers do speak for themselves, and we're confident that if we continue in that trajectory, a lot of the pains as they have started to ease, will continue to ease. I have no doubt about that.
Good afternoon, Governor, members of the MPC. I am Nancy Laji. I'm commonly known as Nancy. Let me also go in tandem with my colleague that spoke last. And the MBS has released the August inflation numbers, telling us that it has cooled to 20.12%, which has been greeted by all of you, the monetary policy and also fiscal policy makers. But I want to ask one key question, which is, how is the central bank going to ensure, alongside the fiscal policy makers, the permanent secretary of the Ministry of Finance is on this committee, she's seated right there, how are you both going to ensure a durable disinflationary trend in the coming months? And Mr. Governor, I'm particular about what I'm asking, because 2026 is a pre-election year, and I hope that these also come out in your meetings. In the next few months, the games will change, and some of these gains that you're saying we are getting around this inflation may actually change. Thank you, sir.
Thank you very much, Nancy. Let me first say something to you. Yes, we are pleased that we are seeing consecutive disinflation. We are pleased. Okay, this is the 5th time consecutive. But I want to say something for the avoidance of doubt, and that is that our goal is for single-digit inflation. That's our goal. Okay, and that is something that we are very resolute on, and we will not stop until we get there. So I want to make that abundantly clear, that that is where we are headed to. Now, in terms of the next few months, and in terms of collaboration between the central bank and the Ministry of Finance, let me be clear in saying that one of the major objectives of an MPC is to be proactive. Is to be proactive. We see data, we analyze data, we see things that many don't see. We look at risks, not just internal, but also external. We project those risks into the future, and we base our decisions on that. And that is why we continue to emphasize that for the MPC, it is critical and has been critical over the recent past, will continue to be one that is data-driven. Data-driven. So we are not oblivious to potential shocks. We are not. We are not oblivious to them. We are ready. We are building the resilience. We are building the buffers. We are looking at the situation, and we are reacting where we have to react, and at the time we need to do so. So please rest assured that as the Central Bank of Nigeria, we will not disappoint in taking the action that needs to be taken to ensure that the hard-earned stability in the system continues as we have seen it. That is key to economic growth. In terms of the Ministry of Finance and the Central Bank collaboration, which is very important, and clearly the Central Bank cannot accomplish its objectives on its own. It cannot. And dare I say and emphasize that the gains we have made so far with respect to inflation coming down, moderation in prices, stability in the system has been a joint effort. Without the Ministry of Finance collaborating with the Central Bank, we could not have gotten to where we have gotten. Going forward, we will enhance that collaboration. And for those of you, members of the press, and I know you follow these things religiously, you will find out that over the course of the past few months, there's been greater collaboration between the leadership of the Central Bank of Nigeria and the Ministry of Finance and the coordinating minister of the economy. We are fully aware of the responsibilities, and we understand that certain things need to happen and need to be protected. Exchange rate stability is key. If we are going to continue to moderate inflation the way we have, exchange rate stability is key. Fiscal discipline is key. We're a bit concerned about excess liquidity and in particular the negative effects of fact releases at certain times of the month or of the year, as the case may be. And it is something that we're watching very closely, and will continue to deploy tools that are required to ensure that the stability that we have attained stays with us into the future.
Good afternoon, Mr. Governor, members of the MPC. My name is Nukachi. Mr. Governor, sir. Yes. Recently, CBN announced an increase in foreign reserve. Yes. Gross figure standing at about $41.6 billion. That is the highest in the last 40 months. So thereabout. Mr. Governor, sir, what is the CBN projecting that the foreign exchange reserve will be like by the end of the year? Thank you very much.
Thank you very much. I would say a couple of things here. Number one, we are very, again, it's a time for us to reflect, because everybody in Nigeria looks at our falling reserves. Many times in countries, it's outside people that do. In Nigeria, it's actually the Nigerians, which is very unique in many ways. Everybody goes to bed looking at the foreign reserves figure, wakes up looking at the exchange rate figure. So I would not be doing too much justice if I didn't say something and share a couple of things with you, since I have this opportunity to do so. And really and truly, one is that we are coming from a very, very, very challenging place. And for some of you may remember when we first published the next reserves figure and what that portended. And since then, it has been on an upward trajectory. It has been on an upward trajectory. And honestly, as far as I can see, the measures that we've used to get to where we've gotten to, and to be able to talk about a foreign reserves position that was the highest since 2019, we will continue to deploy. We will continue to deploy. And I see a lot more acceleration in the way the reserves will be accreting to the central bank. Take for example, the whole issue of the non-resident NRBVN. Take that as an example. Okay. Again, when we started that journey, we were at basically 200 million US per month. And then we said we wanted to double it. And we doubled it in no time. At least by the end of that year, we doubled it. We more than doubled it. And now going into next year, we are saying we are going to attain 1 billion US. And we will do it. Okay. So I believe that new initiatives, creativity, having an open system, giving confidence to potential investors will drive our reserves level on a very, very positive upward trajectory. I hope I've answered your question.
I have a question from Pope Moses Ashike of Business Day. She said, Mr. Governor, this month MPC coincides with the 2nd year anniversary in office for you and your team of 50 governors. Given the challenges at the beginning, how has the journey been so far? And what should Nigerians expect from the Cardoso-led monetary authority in the years ahead?
Thank you. Thank you very much. Need I say that the journey has been rough, very challenging indeed, but at the end of the day, quite frankly, we need to, as Nigerians, we need to have confidence in our abilities. We need to know that there is nothing that we cannot conquer. There's nothing that we cannot conquer. We need to have that strength of character to say, I am a Nigerian, I will do it. I recall that when I came to the central bank, one of the things that disturbed me at the time was a lot of people used to come here, and I used to wonder what they came to do. And when it became clearer to me, I said that by the time I leave the Central Bank of Nigeria, you won't have to come here for anything. You won't have to know anybody to do your transactions. This is a bank that belongs to everybody. And I'm very, very happy to say that 2 years later, I can beat my chest and say we are there now. Transactions get done, you don't need to know anybody. We have a very open and transparent system of ensuring that foreign exchange goes to where it is meant to go to. We don't encourage any hanky-panky or any game playing. It's open and it's transparent. So nothing for you to come here to come and do. We now are left with the bigger task of rebuilding and rebuilding even better. That for us is by far the most important thing. It is by far the most important thing. How do we now begin to accelerate that process of ensuring that the system that we have here, the central bank, is one that the credibility, which is increasingly being recognized, is here and will continue to improve. I must tell you that one of the things you can expect from us going forward is improving the whole issue of ease of access to foreign exchange for everybody. And for example, I give you the example that I know has positively impacted so many, and that is the whole issue of access to foreign exchange. Now when you travel, you can use your Naira card. You can use your Naira card, and this is not a joke. It works. The banks have all, on the back of the positive reforms, all come out and are bringing out new products and ensuring that they get to their customers. The stability we have accomplished, it will continue. And we said it earlier, you asked the question about why we feel that there is a need to defend that stability. And the answer is that these are the kinds of efforts that give confidence to not only people in Nigeria, but the world at large. Much as I said that Nigerians are very interested in our foreign exchange rate. They're also very interested in reserves. I'm sure you'll all agree with me that that level of interest has gradually begun to wane. Now, we are happy to hold on to our naira. We're happy to hold on to our naira. The stability is there. They're not afraid that if you put this thing here and tomorrow it has lost value. Those days now have gradually begun to ease. So people talk about this less and less. And that will continue. Another very important thing you can expect from us, and I think it's very, very, very important to say this. You see, in the process of building and building back better, one of the critical things beyond just bricks and mortar is thought leadership. Thought leadership. As a Central Bank of Nigeria, we must be at the forefront of thought leadership as pertains to matters that affect our economy. And there's a lot of work that is being done in that area, a lot. And in the fullness of time, you will begin to see some of these things roll out. I'm very pleased to say that yesterday I was very privileged to launch a particular program which had 2 instructors coming from the U.S. Federal Reserve Board to come and take a program that was done in collaboration with themselves, our International Training Center and the CBN, on a very, very important topic, and that is on the whole issue of consolidated regulation. But the more important thing there was that we had participants from 7 different African countries. 7. Hopefully, by the time I'm doing this next time, I have no doubt we'll be talking of participation from no less than 20 different countries. That's the direction we're going. That's the direction we're going. We're going to use this as an opportunity to set the tone, and I've said earlier that tone is being set by the top, and I was very happy that a lot of the senior people in the central bank were there, because for us it was a momentous occasion. It's been a dream that we have finally come to reality, and we are going to build on that and ensure that the thought leadership that sadly has gone to the back of the corridor is brought back to its rightful place, and that all Nigerians will be able to rely on all the decisions that the central bank is making, because we will undoubtedly have amongst the best people and people who will be able to give their very best to ensure that we get to where we want to get to. Thank you.
Another question.
Okay, let's take a commercial break now, and we'll come back to wrap up the show.
The Nigerian Association of Liquefied Petroleum Gas Marketers, NAPGAM, invites you to its 2025 National LPG Conference and Exhibition with the theme, Navigating the Future of LPG, Challenges, Opportunities, and Collaboration. This conference and exhibition will bring together industry leaders, policymakers, and stakeholders to address the pressing challenges in the liquefied petroleum gas LPG industry. The conference will be declared open by Minister of State for Petroleum Resources, Gas, Honorable Ekperikpe Ekpo, SSA to the President on Energy, Mrs. Oluve Haihen, and in attendance will be Senate Chairman Committee on Gas, Senator Jarigbe, and the leadership of the NMDPRA, amongst others. Venue is the Bamoro Convention Center, Sheraton Hotel, Ikeja. Date is 24th and 25th September 2025. Time is 10 a.m. daily. Chief host, Abidin Oladapo Olatubosun.
Nigeria animation gets a boost with the federal government policy on nationalization of cartoon content. Meet us at the Lagos International Festival of Animation, LIFANIMA, as we discuss this policy and unveil a major catalyst for Nigerian animation, powered by National Orientation Agency, NOA. Join us for NOA Day at LIFANIMA 2025, featuring a special panel session with distinguished industry experts. Keynote speaker, Director General of National Orientation Agency, Malam Lanre Isa Onilu. Date, October 8, 2025 at Mike Adenuga Center, Ikoyi, Lagos. Let's get animated!
All right, glad to have you back. The CBN Governor is still responding to questions from journalists, but key takeaway is that the MPR has been reduced to 27% and some other fundamentals surrounding the MPR. So we'll just wrap up the show with his, as he keeps on responding to questions from journalists giving his speech after the MPC meeting.
The general populace, international populace, the gains that have been made, share ideas, understand risks better, and help to prepare for those risks even more. There's absolutely no doubt in my mind that when they hear it, and the good thing about going with a smaller group of people, with a group of people which sometimes members of the press, you're also there at times, private sector also there at times, developmental agencies also there at times. It's very helpful to have that discourse that goes across boundaries. Very, very, very helpful. I would also say that in the past we have been able to use that on the sidelines of the World Bank IMF meetings. We've used that as an opportunity to reach out to the diaspora. And where some who are expecting us to come, it may not necessarily be formal engagement, but the informal engagements will take place and will continue, because those, as I said earlier, have brought a lot of benefits. And then finally, to be honest, when you go there, you also find that there are many things you never expected that you will see. And just merely by interacting with others and understanding their issues helps you to bring back a new portfolio of solutions over and above what you've been doing up to that point in time.
Thank you, Chairman of the MPC and members of the MPC. This brings us to the end of this press briefing. Thank you all for coming, and see you in November.
I'll give it to you.
Thank you. Gets better. Well done. Well done. Well done.